Hello, everyone, and thank you for joining the Team Durbin Tuesday webinar. I am your host tonight. My name is Ray Durbin, and here is my contact information. If you need to get a hold of me, you can contact me at our website at happywifehappylife.com and just click on the contact button. You can send me an email, and I will get right back to you. So tonight's webinar, we're going to talk about apartment investing 101, or really any commercial asset. You can use these techniques to evaluate apartments or any commercial asset. So I wanted to start with a disclaimer, basically just letting you know that this is educational and for informational purposes only. I say go ahead and find a commercial real estate attorney, an accountant, licensed professional for any legal tax advice. I am not an attorney or an accountant. This material is strictly for informational purposes only, and it comes from my personal expertise. I want you to go ahead and hire professionals, pay for the best you possibly can afford, get everything in writing. Again, I'll read that again. Make sure you get everything in writing, because if you don't have it in writing, it doesn't really mean that it exists. Also, know that everything is negotiable in a commercial real estate deal. So you could say there are no rules. The only rules are as what you're able to negotiate. So definitely buyer beware, seller beware. So a quick introduction to me before we get into the material. My name is Ray Durbin. Sometimes you may hear me called as RB Ray. I've been a real estate investor now for over 25 years, both part-time and full-time. I've been full-time investor now for almost 5 years. I'm currently investing in apartment buildings in the Cincinnati, Ohio area, the Fort Myers, Florida area, also the Florida Gulf Coast, anywhere from Naples to Tampa. Also, we're investing in vacation rentals in Fort Myers Beach. My expertise comes in really two areas: residential. I own and operate a small single family residential portfolio that I own in Cincinnati, Ohio area. And we're also looking at commercial apartments. We've been looking into those pretty much full time since 2018. So we continue to evaluate and look for commercial deals, mainly commercial apartments. We do private lending. Also, like I said, short-term rentals, vacation rentals. And since 2018, we have basically worked on what we call underwriting over 800 apartment leads since 2018. And my first mentor was a guy named Carlton Sheets. That was way back, probably in the early 2000 area. I did get my MBA at Thomas More College in 2001. I worked for corporate Fortune 500 for over 25 years. My focus was on technology infrastructure, data analytics, and data science. And I currently have a passion for economics, finance, business, real estate, fitness, and family. And as you can see there to your left, I've been a full-time RVer for just over 4 years. We really made that decision to help us with the commercial apartment business that we've been working on since 2018. So why invest in apartments? So the number one reason that I invest in apartments is really for cash flow. Basically, you're buying a cash flowing asset, buying a cash flowing business, and that comes in the form of rental income. So your tenants are paying rental income. Typically, that is a consistent monthly rental income. Also, multiple units means you can diversify risk. If you're managing single family properties, when the single family goes empty, you're 100% vacant. If you're buying a 10, 20 unit apartment building, you have a couple of vacancies, you still have income coming in. So multiple units help you diversify your risk. And if, like I said, if you have one unit vacant, typically the other units are going to pay for that vacancy, which is not the case if you're managing single family homes. Appreciation potential is the next reason why people invest in apartments. You can do what we call forced appreciation. I can talk to you later about that, on what that means. But basically, you're able to control the value of your apartment by the value you put into it. It's really not valued by what we call comps or what the neighbors are doing. So appreciation is a huge potential upside for apartment investing. Tax advantages, there's lots of tax advantages to doing real estate investing in general, but also apartments. You get the depreciation and tax deductions. It's a huge inflation hedge. We know inflation is through the roof over the last couple of years. So typically investing in apartments, it's a major hedge against inflation. And the way that works is rising rents typically go up as inflation goes up. So typically you can raise your rents to match the increased cost of doing business, which definitely protects your business over time. So rents are typically going up pretty much just above inflation. And then, of course, the property values. We talked a little bit about appreciation before. Real estate often appreciates as long as you're buying property in really good areas. You're going to get a lot of property valuation from real estate increasing in value. There is high demand. So there's current workforce, there's mobility lifestyle like myself, there's urbanization, and even affordability causing high demand for apartment units. So there's a really high demand for people to live in apartments. Scalability is another great reason why you want to invest in apartments. Single families are very difficult to scale. It's very difficult to buy as many as you need to really build a lifetime income out of them. Apartments, they have economies of scale. If you can get 20, 30, 40, 50 units under one building, you have one roof to take care of. Typically, you may have, one plumbing, one drainage system to take care of. You may have multiple HVAC units, etc. But you probably have one parking lot, et cetera, et cetera, et cetera. Versus in single families, you have one of everything. You have 10 houses, you're going to have 10 roofs, 10 furnaces, 10 parking lots, 10 yards. So scalability is really, really important when you're investing in apartments. Also, portfolio growth. You can really grow a lot faster with larger buildings. So as you get good at apartment investing, you can start buying larger units. You can start with a 5 unit. That's really the smallest we call a commercial unit. And really they go up to hundreds of units. So you can really grow your portfolio faster. Then also you have a major community impact. So if you want to change the world, you can change the housing and you can bring up a dilapidated property or properties in bad areas or even properties in good areas. You clean those up, make them safe and affordable, provide housing for the community. Those are all the reasons why to invest in apartments. But like I said, the main reason that I invest in apartments or even any real estate is for the cash flow. So like I mentioned early on, the techniques we talk about here works for all the commercial asset classes. You may have thought that multifamily apartment buildings was really the only commercial asset class. Student housing typically falls into the multifamily properties. Also, senior housing also falls into multifamily properties. But you may be unaware of office buildings. There's a huge opportunity now in office. There's a lot of vacant offices, a lot of office buildings that are empty and having a lot of trouble. A lot of them are underwater. So there's a huge opportunity in office buildings if you can figure out how to do investments there. Retail properties, not as big of opportunity as there was a couple years ago. They are coming back, but typically you'll see these in small shopping centers, maybe even malls in your area, standalone retail areas, and also the specialty retail areas. So there's a lot of good opportunity in retail still. Industrial properties, you've probably seen these on the industrial side of town. Typically, you're looking at warehouses, distribution centers, manufacturing facilities. A lot of times you see these around airports or train areas, train stations, etc. Hospitality properties are still popular. They are coming back, just like the retail space, so things like hotels and resorts, just depending on your area. There's plenty of special purpose properties. You've probably heard of a lot of these. These are your self-storage facilities. The data centers now, they're really, really popular with AI and some of the next generation computing, maybe quantum computing. Data centers are going to be really, really important for that. Nursing homes and assisted living. You probably heard of RAL. A lot of people call that residential assisted living. That's a commercial asset class. And then medical office buildings, also a really good opportunity for commercial property investing. And then of course we have the mixed use properties, which can really be a combination of any of these. And typically you see something like maybe a multi-family property and maybe a shopping area or shopping mall. So typically there will be a retail space in the lower half, and maybe you'll have 5 or 6 apartments on the upper half. We call that mixed use properties. So all of these are great commercial asset classes to invest in. My specialty is really multifamily and it's apartment buildings. So this is one thing that you should really think about before starting any investment strategy, especially getting into the apartment space or the commercial real estate space. And I want you to really write all of these down as you go through them here. You can take a quick shot of this, or it's going to be up on YouTube here in the next couple of days. But your investment criteria is super, super, super important, especially when you're getting into the real estate space. These are not what we call short cycle assets. They take a long time to accumulate. They take a long term to, put into your portfolio. They also take a long time to get rid of them. Unlike a stock, you can typically do that in minutes, seconds, hours. Real estate's not like that. The first question I want you to answer is, why are you investing? Why are you investing in real estate at all? Why not some of the other asset classes we just talked about? There's other things to invest in, like the stock market, bond market, etc. So why are you investing in real estate? Like I said, for me, it's all about the cash flow. I'm definitely a cash flow investor. I've been that way pretty much my entire 25 years or so. Also, why apartments? Why not single family? Why not self-storage? Why not data centers? What kind of commercial properties are you interested in? Things like mixed use or retail. So write down why apartments or why the commercial asset class you've chosen. The next one is, what are your life goals? So you need to write down, these investments are going to help you with your life goals. We talked last week about going from a W-2 full-time to a full-time entrepreneur. Passive income or real estate income was a part of that discussion, and that's why it comes into place here. So what are your life goals? What kind of income needs do you need? What are they now? What are they in the future? What are your investing goals? And then what are your apartment goals if you're looking to get into apartments or any other of the commercial classes that I shared with you? Because that's going to help you dictate what kind of income you can produce from your real estate. The next one is, what kind of lifestyle are you looking for? Are you looking for an active lifestyle, a passive lifestyle, a combination of both? Are you looking to be hands-on, or do you want all property management? So you need to figure out, what kind of lifestyle do you want? How do you want to be able to manage your real estate portfolio? It's not like a stock. Typically, you're going to have some kind of management. If it's either property managers, which you can do when you start out, or even doing asset management, which we'll talk about maybe later. So what does your work look like? What does your day-to-day work look like? It's not all passive income. There is work to be done. You have to manage your managers, manage your property manager, manage your asset manager, manage your assets. So it's not all quote unquote passive. There is work to this. And then again, what are your cash flow needs? Are you looking to invest like myself for cash flow? Are you just looking for appreciation and you want to sell the property and just flip it? Do you need tax benefits? I used to have a W-2 and I invested for the tax benefits of real estate. Are you looking to build a business, build a legacy? What is your reason? This is kind of your why. Why are you investing again into real estate? And then what kind of returns are you looking for? You can compare your returns to the stock market. You can compare your returns to other investment classes and see how you're doing against other asset classes. And you can evaluate the next one, which is your risk tolerance. There is quite a bit of risk in real estate, especially if you're doing, brand new builds or rezoning, redevelopment, even repositioning. So you have to say, for this type of risk, what kind of return do I expect and how do I expect to get paid? And if you're going to bring on investors, which is our last one here, are you going to bring on LP, we call limited partners? Are you going to bring on general partners to help you manage the project, fund the project, and even hold the project? So these are very specific criteria. There's a lot to do here. This is very important to write this down. I've learned this over the last 25 years or so. If you don't have a clear plan, a clear roadmap of why you're investing, you will basically get yourself into any new shiny object you see. And the real estate business has all kinds of shiny objects. Every single day, it feels like somebody's inventing something new that you can invest in. So write them down. All right, so here's the numbers you're going to need to get started, at least with an apartment analysis. It's very similar with the other asset classes. But when we do a apartment analysis, you're going to do what we call the income approach analysis versus what we call it the comp approach analysis, which is what you use when you do single family investing. If you're buying a single family property, typically you'll look what we call the comps, which are the comparable properties around you, see what they're selling for, and then you'll come up with your numbers based on that. We don't do that with commercial assets. It's all about what we call the NOI, our net operating income. We want to know how much income is going to come from this asset. How much income does the commercial property produce? And typically you're going to get some documents here that I've got listed. And the first one, if it's listed by a broker, some sellers have these, some sellers don't, but you're here called as an OM. OM means offering memorandum. Sometimes you have to sign what they call an NDA, which is a non-disclosure agreement. Basically means you will not disclose, your seller's financials to the world because that's private information and the sellers want to keep that private. So they have you sign the NDA, not a big deal. Some small sellers don't have these, so don't be alarmed if you don't have these. You can get some of these numbers yourself, but it makes the deal a lot easier to look at if you have an offering memorandum. Typically, professional realtors and brokers will have a huge deck, sometimes 50 or more pages, sometimes it's 2 pages. The first thing you're going to need is the offering memorandum. The next one is what we call a T12 and then a rent roll. So a T12 is basically what they call the trailing 12. So these are financial reports, basically the last 12 months of a P&L. If you know what a P&L, it's a profit and loss statement. And you're going to look at the last 12 months. So it's called a T12 because it's a rolling 12. So every month you get a new month and then you drop off a month. So 12 months of P&L, the latest 12 months is what you want to get. You don't want to get, so if this is February, you want to make sure you can probably get January numbers, December, November, etc. Probably won't get February numbers since February hasn't closed yet. That's not a problem. But you do want to get the most recent rent roll. So you should be able to get an actual February rent roll so you can take a look at what the units are renting for. So if you have 20 units, you should see a rent roll that shows 20 tenants, what they're paying, how much market rent is, et cetera, et cetera, et cetera. So these are 2 more documents you need. You're going to need to know how many number of units that you're investing in, because that's how we're going to come up with your offer price. You'll hear the word sometimes called whisper price. A lot of times there's not a number on a commercial deal. It's not going to tell you what the selling price or the asking price is like you see for a residential property. A lot of times you can ask the brokers what is the whisper price or what is expected to trade for. That's the language you want to use. And then the brokers can let you know what they expect it to trade for or the whisper price. The next one is the GPRI. This is what we call the gross potential rental income. This is basically if you have 10 units and they're all at market rent, you want to know what that gross potential rental income is. We want to know what your vacancy is, your loss to lease, and your bad debt. These are all numbers that come off of the P&L. All of these that I'm talking to you about right now, your profit and loss, you should see your GPRI, you should see your vacancy, your loss to lease, your bad debt. Other income will be on there. Your operating expenses, we call these TIMUR, TIMMUR. This means taxes, insurance, your maintenance, your management, utilities, and your reserves. All of your deals, all of your leads should have TIMUR included. If not, there's a problem and you need to make sure you add it, because a lot of times these get left off sometimes on accident and sometimes on purpose. Having underreported expenses artificially inflates your NOI, which artificially inflates your asking price. You want to know what the financing terms are. Right now, I think I saw the interest rates are probably somewhere in 6.5% to 7% interest on a commercial loan. So you need to know what your financing terms are. You need to know what your insurance estimates are. So places like Florida, California, et cetera, have high insurance right now, so you have to make sure you really understand what those insurance numbers are. And then in some cases, you want to know what the CapEx and your initial due diligence is. CapEx means how much money do I have to put into these units, this property, to get them up to market rent. A lot of times you'll see units that haven't been worked on in, say, maybe 10, 15 years. So you're going to have to rehab those units. We call it CapEx, capital expenditure, to bring those units up to current market. And then, of course, you must do your initial due diligence. You have to look at all the data, verify as much as you can with the seller. A lot of times you'll do this with the tax records, but typically that doesn't happen until you get under contract. All right, so a lot of numbers, but like anything, once you do these a few times, once you've done them 800 times, these come at you pretty quickly. You understand them really fast. All right, so my slide here then, just some lessons learned. So number one, thank you to all the vets that are out there. We always like to thank our vets. We support our vets. We rent to vets. We love the veterans, and thanking all of you vets. So thank you. Some lessons learned here. So the top three for me that I like to share. Number one, we just went through the numbers, right? You have to know your numbers in commercial real estate and apartment investing. Why? Because it is a numbers business. It's not like single family where the numbers may or may not, you may or may not pay attention to them. You know, everything depends on your numbers when you're doing commercial deals, apartment deals. We talked about NOI, net operating income. Everything revolves around the numbers, your value, your expenses, everything's about the numbers. So you must know your numbers. That's lesson number one. Lesson number two is you need to build relationships in this business. It is a small business, if you will. There's a small amount of players typically in each market, so it is a relationship business. So you need to spend a lot of time building relationships with brokers, with bankers, with people like me that are in the business. And that's how you get to the best deals, you get the best information, also get the best terms on pricing. And finally, you just need to make offers, what we call LOIs, letter of intent. With the numbers that I had shared with you, you basically put together a letter of intent and you send that off to your seller or your broker, and then you negotiate the deal. So these are my three lessons learned, and something I'm still doing. All right, so what are next steps? I know I threw a lot of terms at you, a lot of numbers. Like I said, you may not know how to put any of this stuff together, but that's okay because I'm currently offering a workshop. It's actually a 6-hour workshop. And if you click on here, my website, you can see it right here, happywife.happylife.com. You'll see it out here. It's a workshop about profitable apartment investing. Click over here. You can see .com. Then my final slide is to thank you all for attending. I know we don't have a session here for you guys to ask questions online, so you can send them to me. If you go to my website here, happywife.happylife.com, you can contact me there, send me your questions. I'll get back to you as soon as I can. Also subscribe to our YouTube channel. This video is going to be on our YouTube channel, just like all of our other videos we've done. There's already one out there on the last week's presentation about how to go from a W-2 full-time employee to an entrepreneur. We talked about finance there. So there's a video just like this out there. You